Welcome to this edition of In-Depth Alaska. I'm Tracy Sinclaire. There has been a lot going on with the markets, kind of some insane market volatility and worries about recession and tariffs. And we just wanted to get a little deeper information and just talk about it with somebody who knows what they're talking about. So joining me today is Al Biss with Biss Wealth Partners, financial advisor. Thank you again for joining me. And I want to point out that we are recording this on Wednesday morning, April 9th, because things are changing so much. I kind of want to give everybody a perspective. Markets are on the rise this morning. The S&P, as of about 10 o'clock Alaska time, was up 7%, but it's been dropping for days. And then this morning, President Trump announced a 90-day pause on those tariffs that were going into effect overnight. Okay, so markets are coming up a little bit. Does everybody breathe a sigh of relief at this point?
Kind of, but not really, because the whole reason the market popped up was Trump giving that 90-day break on tariffs. Now, we saw Monday was an interesting day. They started off down quite a bit, 3-4% or so. Then there was a rumor that Trump was going to delay the tariffs by 90 days. On the rumor, the market shot from down 4 to up 2%. And then the White House came out saying, no, that's fake news. And they went back down 1% or 2%. So just the news on this, or potential news on this, is whipsawing the markets. And that shows you how much these tariffs can affect long-term planning and long-term finances of companies. So that uncertainty, we've got some certainty today. So there's the 90-day pause, except on China. Markets rejoice because now, hey, we've got 90 days. Hopefully they'll work something out. But that is so dependent on what is going on this moment with what the president says.
And so one of my questions was basically, what does this instability mean? And because it has been so up and down in the last month, do you think that businesses and companies are going to say everything's fine, or are people still going to be a little bit hesitant?
They're absolutely going to be hesitant because no one's sure how this is actually going to shake out over the long run. One of the big things that people were happy about today is, okay, we've got 90 days. Hopefully this will then get to negotiations so we can then plan long term. Maybe we work different agreements with, I know Japan's come to the table, Korea's come to the table, Vietnam's come to the table, Israel, other places have come to the table. Some places haven't, though, so maybe this will give Europe, and probably not China, but we'll see, time to come and so we can get some certainty. The big uncertainty is if I'm a company and I'm building widgets in China, well, okay, they're getting creamed. If I move it to Vietnam, are they going to raise tariffs? If they move it to Mexico? So until that's known, companies aren't going to go out there and spend a lot of money that are 3, 4, 5 years down the road to build the factories, build the plants, and then sell it to us.
Yeah, so we need a little bit more. We need some answers before things will start happening again. Right. Because I know I did see earlier today as well that Europe is imposing, I think, a 25% tariff on U.S. goods. So, and whether they'll pause that now, we don't know. So one of the other things is that this morning the strength of the U.S. dollar fell to a 6-month low because those new tariffs had gone into effect already. What does a weaker dollar mean for the economy? I don't actually understand dollar strength very well.
Okay, let's go over that. So there's advantages and disadvantages to most everything. So the advantage of a weaker dollar is stuff we make here in the U.S. So if we're making a widget for $1 here in the U.S. and now the dollar's gotten weaker, we can sell that widget for $1 over in Japan, but instead of it being $1 to them, it's 95 cents or 90 cents. So a weak dollar is good for us exporting stuff, but it's bad for us when we're buying stuff from China. So if it's a widget that's essentially a Chinese dollar and US dollar, it's even right now, and now the dollar gets weaker, that Chinese widget costs now $1.05 or $1.10 to us in US dollars. So it does a couple fold. First of all, it makes imports more expensive, which means the cost of our stuff's going up even on top of tariffs. When tariffs hit a couple years ago, the dollar had gotten stronger, so that offset some of that tariff cost. Now with the dollar getting weaker, it's kind of a double whammy. We've got higher tariffs on those goods coming in from overseas and a weaker dollar to purchase stuff with. Now, you're talking a little earlier about taking a trip. So, last summer or two, if you go to Europe, you went to Asia, our dollar was very strong. We could go over there and buy stuff inexpensively. Now that it's weaker, it'll cost us more. So It's not good for a consumer for the short term for buying stuff shipped overseas, but it's good for our manufacturing and for our producers here to be able to sell stuff overseas less expensively and more competitively.
And then, because we are a very tourist heavy economy up here, when, say, somebody from Europe comes over, will they be more, it might be more likely to spend because the dollar's weaker?
Yes, they'll feel much more wealthy than they were last summer when things in Europe were cheap for us and expensive over here for them.
Okay, so maybe, as you said, a little positive and negative for everything. Now, when it comes to stocks,
Yeah.
you hear the buy when it's low, buy low, sell high. Of course, that's the traditional advice, obviously hard to follow. Is now a time when people should be looking at buying as things were so down, or?
Give my usual response to most things. It depends.
Yeah.
If this is long-term money that you know you're not going to use for years, yeah, it's a good time to take advantage of things when they're less expensive. I mean, when we're buying stocks, what we're doing is buying companies. So if I look out there and this company is pushed down on price, but their earnings are still good, their business is still good, their sales are still good, it's growing, all the fundamentals are still good, then yeah, you can take advantage of it. If it's short-term money, though, I'd be a little nervous. You probably shouldn't be in stocks because there's a law we use around our office. It's Murphy's Law. I don't know if you're familiar with it, but if you put money to work in stocks, you need it in 6 months, market will be down in 6 months. So for shorter term money, you'll want to be able to stick with stable, steady stuff like money markets, CDs, things like that. But yes, for long-term investment dollars, I've got one of the only businesses when things go down, no one wants to buy it. But that's when you take advantage of it if you can. You have the money available and put it to work.
And so, is now a good time to, if you are doing like more steady state, or if you're a little bit freaked out about the changes in the market, to buy those more stable things like money markets, CDs, those sorts of things?
Well, if it's long-term money, it's a good time to take advantage of a down market. Now, where's the bottom? No one knows for sure. What I do know, though, is I can buy good companies today less expensively than I could, a couple weeks ago. Now, will they keep going down farther? If I knew that for sure, probably wouldn't be talking to you. I'd have my own island somewhere, no offense. But I do know we can buy good stuff less expensively. Does it mean it won't go down more? No. But I know long-term, 10, 20 years down the road, I'll be pretty happy. And over my 20-plus years of doing this, one of my regrets is I was not more adamant to have folks buy when things are down. When things are down, it's kind of like eating your vegetables. They don't taste good right now, but they'll build you stronger over the long run. Same thing when things are down. Buying on the cheap doesn't feel good. No one's excited about it, but long term, it'll build you a strong portfolio.
Yeah, I'm a little worried. There are these people that I think they call them harbingers, that basically they can, if they buy a product, it's going to fail. There are certain people that they buy things and then it does not work out. And I'm a little bit worried I'm like that with stocks, that I buy them because I have one of those Robinhood accounts that I just play with a little bit of money. And almost consistently, anytime I've bought something, it drops within a week. And then I have to wait while it comes back. And eventually, most of them have. But so I'm a little bit worried that that I'm one of those people for stocks.
Well, that's confirmation bias. You've got this bias that when I buy stuff, it goes down. So I always use the analogy. So if you went to cars and you went and bought some detergent that you always buy, and you come back a week later and you're like, it's 20% off. Are you going to swear off never buying it again and get upset, or are you going to stock up and get some more? If it's still a good quality company or good reasons why you bought it are still there, it's a good chance to take advantage of that. If it's, there's issues with it and there's a reason it came down, something came up with it, well, yeah, reassess. But if you go to the grocery store and everything you bought last week's cheaper by 10, 20%, you don't swear off never going to the grocery store again. You're like, maybe I should stock up if it's not perishable.
That's okay. That's a good way to look at it. Are any of the industries in Alaska, primarily I'm thinking about oil and gas, are they impacted by either market volatility like this or the tariffs that we're seeing?
Good question. What we're seeing, Alaska is very oil and gas dependent. The price of oil has come down substantially in the last month due to the fact worries of tariffs. It's couple-fold. First of all, some countries will probably tariff our oil and gas exports to them. But the big thing is the worries of an economic slowdown, a global recession. Recessions push down demand for oil, price goes down, plus Saudis have been pumping more recently. So we've seen that price of oil drop quite a bit into the 60s. which that will negatively affect the Alaskan economy, especially on the state level, because the state is so dependent on oil revenue for making the money that runs the state.
Yeah. I know, was it Governor Walker, when we asked him, what was the biggest surprise in your job? And he said $45 a barrel oil.
Yeah.
And because that had just dropped when he went in. And that was the first time I thought, oh, that's right. We do have to, that's what we operate on. And so we will obviously be impacted by that. What about small businesses? Do these erratic changes affect, local businesses?
Yeah, in the sense that people are less willing to spend money. They'll think twice about going out there to pick something up. If you're worried about the market and your investment dollars, it's usually not a huge change, but some people will be a little more hesitant. We see this in different markets around where prices have stagnated or started to come down a bit. Now, some of that might be that prices on things were pretty high. They're coming back to a normal area, but at the same time, for small businesses, if I'm feeling a little tight, I'm not feeling as flush with cash as I was when markets were up and I was feeling good, maybe I don't go out to the restaurant tonight. Maybe I hold off on that purchase. But that's usually kind of the trickle down. There's not a direct effect of, yes, this happened, so this is bad. It's people are just a little hesitant to spend, which kind of snowball effect.
Right. Okay, that makes total sense. Is there anything that, I guess, your best advice to consumers, to people that, are we okay? Should we be bracing ourselves? Is there anything we should be doing right now?
Just think back to what your long-term goals are. If something's changed in your life that should then affect how you're allocating assets and how you're investing, then that should be a change. If not, do a check-in on yourself going, well, yeah, my goals are still the same. This is all the same that was before 3 weeks ago. And then take out the news cycle of the last 3 weeks, which has been all over God's green earth.
Right.
And then say, okay, well, if that hasn't changed, what should I be doing going forward? Should I start looking at, hey, maybe take a little more risk, take advantage of some of these down prices? Or no, I'm pretty happy where I'm at. Or, I'm really having a hard time sleeping at night here. Maybe I need to take a little off the table because of that. But you come back to it in a week or two, seeing how things, yesterday, who would have said, oh, Trump's going to come out and say, oh, we're 90-day pause on tariffs. We're seeing a 6% jump in the market in an hour, in 5 minutes. So it's extremely volatile. So don't make long-term investment decisions with short-term news.
Okay, that makes sense. I know, because I had a friend that when the market went down years ago just went, I'm done, I'm out.
Yeah.
And hasn't been back into it. And as we've discussed, I'm just not looking at my 401k. But there are some people that we're planning to retire in the next year or 2 years. Right. What should they be doing?
Well, the thing you got to realize is that you might be retiring in the next year or two, but you're going to need that money for the next 20, 30 years or more sometimes. So just because you're retiring at this point, you want to have more in your stable, steady assets, but you're still going to need a stock component out there to get that long-term growth to keep up and hopefully ahead of inflation over time. So just because you're retiring at this point doesn't mean we're going to move all to cash.
It's not like you're going to say, I'm taking all my money now.
Right.
The day I retire.
You could, but you're going to have inflation issues over the long run. The thing that's a little more subject to that, because it's a much shorter time period, I was reading an article on this today, is college savings plans, because you've got usually a 4 to 5 year window to use that. So those tend to get even more conservative as you get closer to using.
What was that phrase you used?
College savings plans.
Oh, college savings plans.
Yeah, like 529s,
Right.
things like that. So those are more susceptible even because it's a shorter time frame of using the money, whereas retirement plans are going to be going long term.
And then what are you hearing from, I guess, what is on your mind right now? We have just a few minutes. What has been your thoughts with all this going on?
I've been through a lot of these over time. It's always a different reason for it, but what makes me feel better is it's kind of like when COVID hit. We knew exactly what the issue was. Back then it was COVID. This is tariffs. All of this is driven by tariff uncertainty. So it's not like there's a bunch of different things happening out there. As we've seen with the market in the last 2 or 3 days, it's completely whipsawing on one thing. So we know the one thing. You can then kind of go through and see, okay, best case scenarios, worst case scenarios coming down the middle. But it's one thing driving this all. So that makes me feel a little better that it's no fun. It's not a great thing, but we know what it is.
Okay, and we're not trying to say if all these different things, moving parts, or we don't know why people aren't investing. This is a known entity.
And the tariffs do have a huge downstream effect on a bunch of things, but this is the thing that's moving everything around. there's a lot of unknown, but the main part of it, it's known. It's not that random black swan event that comes out of left field that whacks you that you were not seeing. We're seeing this coming at us, and we dodged it recently for maybe 90 days, but we'll see it in the future.
Okay. Al Biss, financial advisor with Biss Wealth Partners. Thank you so much for joining us again and kind of talking us through some of these. I am learning so much.
Oh, thanks,
Every
Tracy.
time we do this, I'm learning so much. And I hope you are as well. So join us again for the next time for In-Depth Alaska. Please like and follow this podcast.